Welcome to Bhaarat, your trusted source for the most important updates from the Indian stock markets and economy. In this weekly wrap up, we bring you the top 15 major developments that moved the market between February 28th to March 6th this year. From global geopolitical tensions impacting crude oil prices to major regulatory announcements by SEBI, sectorial movements in ports, IT, banking, and more. We cover everything investors need to know. If you want to stay updated with stock market news, economic trends, and investment insights, make sure you like this video, share it with fellow investors, and subscribe to Bhaarat Wealth. Now let's deep dive into biggest market moving stories of the week. First, we'll discuss about global geopolitical tensions trigger market sell-off. Global geopolitical tensions in the Middle East created strong volatility in the global markets this week. Rising conflict concerns pushed crude oil prices sharply higher, which negatively impacted risk sentiments in emerging markets like India. The Indian stock market witnessed heavy selling pressure as investors worried about inflation and economic stability. Brent crude prices surged nearly 20% during the week, hitting around $87 per barrel, a 20-month high. Higher oil prices are particularly concerning for India as it imports the majority of its crude oil. As a result, investors turned cautious and triggered their exposure to equities. Next, we'll discuss about Sensex and Nifty for post-worst weekly performance in over a year. Indian benchmark indices experienced one of their weakest weeks in more than a year. The Nifty 50 declined around 2.9% for the week, while the Sensex also dropped nearly 3%, reflecting broader market weakness. Markets fell sharply on Friday with the Sensex dropped more than 1,000 points, while Nifty slipped below the 24,500 levels. The fall was driven by global risk-off sentiment, rising crude oil prices, and investor profit booking. The sharp correction wiped out part of the gains seen early in the year. Next, we'll discuss about banking and financial stocks leading market decline. Financial stocks were among the biggest losers during the week. PSU banks and financial institutions saw strong selling pressure amid concerns about global economic uncertainty and triggering liquidity conditions. State-owned bank stocks fell nearly 6.5% during the week, dragging the broader financial index lower. Since financials carry significant weight in the FT index, the sector's weakness amplified the overall market decline. Analysts believe that the banking stocks may remain volatile until global macro conditions stabilize. Next, midcap and small cap stocks see sharp correction. The broader market also witnessed heavy selling pressure during the week. The midcap index fell nearly 2.9%. While the small cap index declined around 2.5%, indicating widespread risk aversion among investors. Many high valuation stocks faced profit booking as investors moved towards safer assets. This correction reflects caution after strong rallies seen earlier in several mid-cap and small-cap counters. Experts say valuations in some segments remain stretched, which could lead to further consolidation. Indian rupee weakens amid global uncertainty. The Indian rupee also came under pressure during the weeks due to rising crude oil prices and global uncertainty. The currency recorded its sharpest weekly decline in over a month, reflecting capital outflows and higher import costs. Since India is a major importer of crude oil, rising energy prices tend to weaken the rupee and widens the current account deficit. A weaker rupee also increases inflation risks. which can influence monetary policy decisions going forward. Next, we move on to IT sector faces pressure amid global tech concerns. The IT sector remains under pressure as concerns about AI and global technology spending affected investor sentiment. The Nifty IT index has fallen significantly in recent weeks, reflecting fears that AI could disrupt traditional outsourcing models. Investors are also closely watching how large IT companies adapt to evolving technological trends. While the long-term outlook for digital transformation remains strong, short-term uncertainty has led to cautious positioning in the sector. Next, foreign investors turn cautious. Foreign institutional investors showed signs of caution during the weeks amid global market uncertainty. While foreign funds had previously invested strongly in Indian equities earlier in February, recent volatility has slowed inflows. Global investors are closely watching geopolitical developments and crude oil prices before increasing their exposure again. Despite short-term volatility, India continues to remain a preferred emerging markets for long-term investors. Next, we move on to SEBI's introduced new lock-in facility for mutual funds. Market regulator SEBI introduced a new voluntary lock-in or debt freeze facility for mutual fund folios. This initiative aims to enhance investor protection and provide better control over fund holdings. Investors can choose to temporarily restrict redemptions or transactions from their mutual funds amounts. The move is expected to reduce risks related to fraud or unauthorized transactions in investor portfolios. Such regulatory initiatives strengthen transparency and security in Indian financial markets. Next, new regulatory reporting rules for alternative investment funds. SEBI also introduced updated regulatory reporting norms for alternative investment funds (AIFs). These new guidelines aim to improve transparency, data reporting, and compliance standards within the alternative investment ecosystem. AIFs have grown rapidly in India over the last few years and play an important role in private equity and venture investments. The regulatory updates are expected to bring better oversight and risk management in the sector. Port sector attracts global brokerage attention. The ports and logistics sector received positive attention from global brokerage firms this week. Analysts expressed a bullish outlook on Indian ports infrastructure growth due to increasing trade volumes and logistic demand. Stocks in this sector could benefit from rising cargo tariffs, traffic, and government infrastructure investments. Long-term prospects remain strong as India continues expanding its maritime and logistic capabilities. Next, energy price becomes key risk for Indian economy. Rising crude oil prices have become one of the biggest macro risks for the Indian economy. Analysts warn that sustained increases in oil prices could fuel inflation and widen India's fiscal deficit. Higher fuel prices also impact transportation, manufacturing, and consumer spending across sectors. Investors are closely watching crude oil price movements as they have a direct impact on market sentiment and policy decisions. Next, market volatility increases as India VIX rises. Market volatility increases significantly during the week as uncertainty rose across global markets. The India VIX Volatility Index jumped sharply, reflecting rise fear among investors. Higher volatility typically leads to cautious trading behavior and sudden price swings in equities. Such spikes often occur during geopolitical uncertainty or major macroeconomic events. Traders are closely monitoring volatility levels to gauge short-term market directions. Next, manufacturing and investment continues supporting economic growth. Despite short-term market volatility, India's macroeconomic outlook remains relatively strong. Manufacturing activity, infrastructure investments, and domestic consumption continues to drive economic growth. Economists estimated India's GDP's growth for FY26 to remain around 7.6%, supported by strong domestic demand and investment cycles. This strong economic backdrop continues to attract global investors to Indian markets. Next, shorter trading weeks ahead due to market holidays. Stock market participants should also note that trading weeks in March will be shortened due to major holidays. Indian stock exchanges will remain closed on March 3rd for Holi, along with other religious holidays later in the month. Such shorter trading weeks can sometimes lead to increased volatility due to compressed trading sessions and reduced liquidity. Investors should plan their trading strategies accordingly. Next, analysts see buying opportunity after correction. Despite the sharp market corrections this week, several analysts believe the decline may create attractive buying opportunities. Historically, market corrections often provide entry points for long-term investors. Many experts believe India's long-term growth story remains intact due to strong demographics, policy reforms, and economic expansions. Investors with a long-term horizon may consider accumulating quality stocks during market dips. That's all about it. This was the weekly stock market wrap from Bhaarat, covering the biggest market moving stories between February 28th and March 6th, 2026. Markets remain volatile due to global tensions, rising crude oil prices, and sector-specific pressures. But India's long-term growth story continues to remain strong. If you found this video helpful, don't forget to like the video, share it with your friends, and subscribe to Bhaarat for weekly stock market updates and economic analysis. We'll see you in the next video with more important updates from the Indian financial markets. That's all about it. Jai Hind, Jai Bharat. Thank you.
This is for educational purposes only. Investments are subject to market risks. Read all the scheme-related documents carefully before doing your investments.